Hello everyone. Let's start our today's discussion. From today, we are starting series of past paper discussion sessions on Advanced Audit and Assurance exam. In these past paper discussion sessions, we will discuss complete papers of Advanced Audit and Assurance and we will draft their answers during class. These past paper discussion sessions will give you a revision of different topics and also an understanding that how you have to deal with a complete exam paper. One of the major reasons for failure in advanced audit and assurance is lack of complete past paper practice. Students do not practice complete past papers, and as a result, they are not able to deal with all the topics together in examination. As you all know, that in advanced audit and assurance, there are 20 professional skill marks, and they are awarded to the student if they attempt their auditing requirements in a professional manner. Students have to attempt 80 marks requirements relating to auditing. And if they attempt those 80 marks requirements in a professional manner, they get 20 additional marks. Now, before starting the first past paper, I'm guiding you the approach that how you have to access the CBE practice platform of ACCA. Many of you may know this in advance, but those who are new to CBE practice platform, I'm giving a brief guidance. First of all, you have to open accglobal.com, okay? And then you will go on the Students tab. In the Students tab, you will go on Study Support Resources, okay? Once you reach this page of Study Support Resources, you select ACCA qualification, and then you go to Advanced Audit and Assurance, okay? Here, you will scroll down and you will select Past Exams and Questions Practice. Okay, here you will click on Login to the practice platform. Okay, an external website will be open. You will log in through your login credential of My ACCA, and then you will reach this screen. Okay, on this screen, you will go on Advanced Audit and Assurance. You will click on International. There are ACCA's official resources. Okay, practice exams valid from September 2022 session onwards. Okay, because in September 2022 attempt, the exam pattern was changed. Okay, and then today we are doing this specimen paper. You will click on Assign. Once you will click on Assign, on the left-hand side, this paper will start appearing. AAA International Specimen. And then you will click on Start. Okay, so from the ACCA Global website, you go to Students, Study Support Resources, you go to Past Exam Paper tab, you click on Login to the external website for CBE Practice Platform. In the catalog, you go in Advanced Audit and Assurance, International, okay, ACCA Official Resources, and then you go on Practice Exams valid from September 22 onwards. And here is your AAA International Specimen exam. See, it is very important that you practice few papers on the CBE practice platform. Okay, so that you can understand that how you have to deal with the examination paper. Okay, now there are some introduction screens which give us guideline about the exam tools. Okay, so we'll simply click next, next, next. We'll discuss all of them when we'll be drafting the answer. Okay, and then you'll click on yes, that okay, I want to start the exam paper. And this is the question number 1. I want you all to listen to me very carefully with patience and concentration so that you people can understand that how you have to attempt the auditing marks in a professional manner to get complete marks. See, this question number 1 has 40 marks relating to auditing, which you have to attempt. 10 professional skill marks are not a separate requirement. The examiner says that you have to attend these 40 auditing marks in a professional manner to get complete 15 marks. I have already attached a complete lecture on professional skill marks. Okay, so if you have not attended that, do make sure that you attend that before looking towards this lecture. Okay, so let's read this question. We will first read the entire question. We'll read all the exhibits, and then we will start drafting the complete answer. Okay, now it is 1st July 2005. You are a manager in the audit department of Pegasus and Company, a firm of chartered certified accountants. You are assigned to the audit of the Crux Group, which has a financial year ending 30th September 2005 and is a listed entity. Pegasus Company was appointed auditor to the group in January 2005. So this means that this is first year of audit for us. The group operates in the travel industry, offering selection of worldwide itineraries and has a fleet of 20 cruise ships. The group operates 3 brands which provide different type of cruise experiences. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Partner's email, an email which you have received from Norma Star, the group audit engagement partner. Background information, information in matters relevant to audit planning, selected financial information, extract from the group management accounts, and audit team meeting notes. Extract from meeting notes taken from a recent audit team meeting. The information should be used to answer the question requirements within your chosen response option. So this was an introduction about the question, that what this question is about. Okay, so we are a manager in the audit department of Pegasus and Company, and we are doing audit of Crux Group. The year end is 30th September 2005, and we have also been appointed as auditor during this year, which is January 2005. So it is first year of audit for us. Okay, now let's look at the exhibits. Okay, I always say to my students that when you are reading the question for the first time, don't rush. Read it with patience and concentration. Believe me, every question is easy if you read it carefully. Okay, so let's read this partner's email, that what the question is about. Now, to audit manager from Norma Star, the audit engagement partner, subject audit planning for the Crux Group, date is 1st July 2005. I hope you all know that in question number 1, you have to make a format of briefing notes. So for this, he is giving us the data about to, from, subject, and date. Hello, I have provided you with some information which you should use to help with the planning of the audit of our new client, the Crux Group, for the financial year ending 30th September 2005. Based on the analysis I have done on this industry, it is appropriate for overall materiality to be based on profitability of the group, as this is the key focus for the investors and providers of the finance. See, the examiner has clearly stated that you have to use profits as a benchmark for materiality. Now, you all know that there are 3 benchmarks for materiality provided by auditing standard. One is 0.5 to 1% of revenue, then 5% to 10% of profit before tax, and third is 1% to 2% of assets. The question has specifically stated that we have to use materiality based on profitability. So on the basis of profitability, it will be 5% to 10% of profit before tax. Okay, see, it is very important in communication marks that you read the examiner's instructions clearly. Okay, I require you to prepare briefing notes for my use, in which you, part A, using the information in all exhibits, evaluate and prioritize all significant audit risks to be considered in planning the group audit. So we have to discuss the audit risk and we have to prioritize them also. In the professional skill marks lecture, I have told you people that prioritization do not mean to prioritize all risks. Prioritization means that you have to write 3-4 important risks at the start. And you have to give a reason that why you are considering them as the important risk. Okay? The examiner is clearly stated in professional skill marks that prioritizing significant audit risks do not include prioritizing all of them. Prioritizing significant audit risk means that you have to write few important risks, the significant risks at the start, and you have to give a reason that why those risks are important. We look at all of these in detail when we'll be drafting the answer. Note, you are not required to consider the audit risk relating to foreign exchange transaction and balances as they will be planned separately. Again, it is very important to look at the examiner's instruction. When he has clearly said that you don't have to consider foreign exchange risk, so make sure that you don't include those risks also. So it's a 25 marks question relating to audit risk. The first audit risk we already know that this is our first year of audit since it is a new client. We write this risk always whenever there is its first year of audit and the question is about audit risk. So you can simply draft a point that Pegasus company will be auditing Crux Group for the first time in the year ended 30th September 2005. As it is first year of audit, our firm will lack understanding about the client's business and its environment. So this will increase the detection risk. We will not be able to identify the issues in a good manner, in an appropriate manner. Okay. And you all know that whenever you identify a risk, it is very good if you write some response to it also. So you can write a response that in order to deal with this risk, we will perform the audit planning in a detailed manner. Okay. We will spend greater time during the audit. We will perform detailed reviews when we will be finalizing the audit. So you can write some responses also. In relation to first year of audit, you can also identify an issue relating to opening balances. That in relation to opening balances, there will also be an audit risk. That since it is first year of audit, we have not audited the prior year balances. So if there are any misstatement in opening balances, they can affect our current year audit. Again, you can write a response that an auditor can perform detailed review of opening balances as per auditing standard to cover up this risk. So we will draft all the points when we will be attempting the answer. But what you need to understand is the most important thing that examiner says that students just identify the risk. They don't explain the risk. What do you mean by explain the risk? Explaining the risk means that why that thing is a risk and what will be its impact. For example, if you're writing that it is first year of audit, then why is it a risk? It is a risk because in first year of audit, we may lack understanding about the client's business and its environment. And what will be its impact? It will create detection issues. We may not be able to identify issues in a better manner because we don't have good understanding. Okay, we'll look at the approaches in more detail when we'll be drafting the answer. So part A is the most important 25 marks relating to audit risk. In audit risk, you will cover up risk relating to a financial statement, which we call as risk of material misstatement also. And you will also consider risk relating to auditing activity. Because in audit risk, you include risk relating to accounting and relating to audit activity both. Okay, so the financial statement risk, the accounting risk gain 3 marks and the auditing risk gain 2 marks. You all know that. Okay, we look at it in more detail later on when we'll draft answer. Then part B, describe the principal audit procedures to be performed on segmental information relating to group revenue. We look at further detail that what is the segmental information. We have to write principal audit procedures. So there are 5 marks, which means 5 procedures. And using the information in Exhibit 4. Evaluate the matters to be considered in deciding whether Pegasus and company should accept the engagement to provide advice on the group's social and environmental information. Okay, so matters to be considered before accepting an additional engagement relating to social and environmental information, and this is a 10 marks requirement. So if you look at it, 25 marks plus 5 marks, 30, and 10 marks, 40 marks. So question number 1 is 50 marks. Why there are only 40 marks requirement given? See, you have to attempt only 40 marks. But while attempting these 40 marks, you have to make sure that you attempt in a professional manner. So you will get those 10 additional marks. Okay? So these professional skill things is good or bad from the examination perspective. See, I will say it is good from exam perspective and also from practical life perspective. In examination, your time management will improve because now you have to attempt lesser marks requirements. You don't have to attempt 50 marks in question 1, you will just attempt 40 marks. So this will improve your time management. Your total time of the exam is still 3 hours and 15 minutes. But now you don't have to attempt 100 marks, you will only be attempting 80 marks. Secondly, from practical life perspective, this professional skill in your communication, in your analysis and evaluation, in your skepticism and judgment, commercial acumen, this all will help you a lot in your practical life. Okay, so if you look at the requirements, respond to the instructions in the email from the audit engagement partner. The split of mark allocation is shown in Exhibit 1. We all know that, 40 marks. Professional marks will be awarded for demonstration of skill in communication, analysis and evaluation, professional skepticism and judgment, and commercial acumen in your answer, 10 marks. Okay, so professional skill marks are additional. Now, let's look at the background information. Okay, and first we'll read the scenarios and then we'll move towards drafting the answer. Okay, group operations. The group operates cruises under 3 brands which offer passengers a variety of cruise itineraries with a wide choice of destinations. Cruises typically last for 2 weeks, though some last for up to 6 weeks. The brands are internally generated and therefore not recognized as intangible assets with the group financial statement. So yes, this is correct. We don't recognize internally generated brands. Information about the 3 brands operated by the group is as follows. Sunseeker Cruises, cruise which visit beach destinations in the Caribbean, Europe, and North America. Explorer Cruises, cruises which focus on visiting cities and landmarks around the world. And Pioneer Cruises, cruises which take in areas of natural beauty, including Antarctic and Alaska. So there are 3 segments. One is Sunseeker Cruises, one is Explorer Cruises, and one is Pioneer Cruises, in which the business is dealing. It has 3 brand names. Business developments in the year. Sunseeker Cruises. In this financial year, the group will spend $75 million on upgrading and maintenance of the Sunseeker Cruises. These luxury ships have to adhere to a very high standard, so the group regularly incurs high expenditure on their maintenance. Here you can identify a risk relating to financial statement. That group is spending $75 million on upgradation and maintenance. Use your mind. IAS 16, property, plant, and equipment. If the expenditure is done on upgradation, it will be considered as capital expenditure. It will be capitalized. But if it is a maintenance expenditure, it will be expensed out. So we always identify this risk whenever we look this level of capital spending. We identify a risk that there is a risk that the upgradation and maintenance expenditures are not properly differentiated. Maybe some of the maintenance expenditures are capitalized. or maybe some capital expenditure which are relating to upgradation are included as maintenance expenditure. This will misstate your assets and profits. As well as refurbishment, several ships have been enhanced by the installation of new entertainment facilities, including cinemas and gyms. Equipment in gym will need to be replaced on average every 3 years. So here you can draft a very good risk that as per IS 16, the Crux Group need to consider that they differentiate, they divide their spending of $75 million done on upgradation and maintenance between capital expenditure and revenue expenditure. Upgradation outflows, which include outflows done on new facilities like cinemas and gyms, will be capitalized as property, plant, and equipment, whereas maintenance expenditures will be expensed out. If wrong outflows are capitalized, it will overstate the assets and the profits of the company. Okay, and then you can also identify that they have to make sure that the equipments in the gym are depreciated separately on their 3 years life. Okay, we may not be doing an error that we are using the same average life for all the assets. These equipments in the gym have to be depreciated separately over their life of 3 years because they have a separate 3 years life. Okay, maybe other equipments have extra life. So we will draft all of these risks and we look at them in detail when we'll be drafting the answer. Okay, sir, can we write the risk along with reading? Yes, you can do that also. Okay, and you can first read the entire question and then also you can write. Sir, now there is one question. Sir, if we write the risk along with reading, and if at the later part of the question we find any additional information which we think need to be included in the risk which we have already written. So see, the exam is computer-based. You can simply go and edit the things. Earlier, like a long time ago when the papers used to be written papers, the paper-based exams, it was not possible to edit the point which we have drafted. We have to cut it and we have to rewrite it. But in computer-based, the good thing is that we can simply go and edit it. Okay, so if you want, you can write the risk along with reading also. We'll also start writing, but first I will read a plenty of information and then I will start reading. Okay, now Explorer cruises. The Explorer cruises, while still luxurious, are the oldest ships in the fleet. And the group is gradually replacing these with new ships. During this financial year, 2 new ships with a total cost of $110 million will come into use. The ship took 3 years to build and were constructed by Vala Shipbuilder Company, a company which is not owned by the group. However, the chairman of the group, Max Draco, is also the chairman of Vala Shipbuilders. See, it's a related party situation. And his son is the company's chief executive. This is also a related party issue. The purchase of the ship was financed through a $110 million loan with a fixed interest rate of 6% per annum. So it is IS 23 borrowing cost. Okay, because it is taking 3 years to build the ship. So when it's taking 3 years to build the ship, the borrowing cost will be capitalized as per IS 23. A further 3 ships are under construction by Vala Shipbuilder Company. The group has taken out a loan of $180 million with a 6.5% fixed interest rate to finance this capital expenditure. So this is also related to capitalizing the borrowing cost. Okay, so you can identify 2 points from this. You can discuss a point relating to related party, and you can also discuss a point relating to capitalization of borrowing costs. Then there are Pioneer cruises. These cruises are for more advantageous travelers and are growing in popularity. In order to visit certain destination on these specialist cruises, the group has to acquire operating licenses from local governments. The cost of license acquisition is capitalized as an intangible asset. Okay, so this is the background information which is provided to us. Then there is some selected financial information given in Exhibit 3. Okay, so let's look at it. Crux Group extracts from the management accounts. So these are the current year and the last year data which is provided to us. The group revenue was $670 million in the previous year. Now it is $764 million. Operating profit has increased from 101 to 145 million. Profit before tax has increased from 65 million to $81 million. Total assets have increased from $1,780 million to $1,800 million. Okay, so from profit before tax, you will calculate the materiality 5% to 10% range. Included in total assets, intangible asset, operating licenses, they have decreased from 57 to 56, and property, plant, and equipment have increased from 1,510 to 1,520. Let's read note number 1. Revenue includes passenger ticket sales, which accounts for approximately 85% of the revenue. When customer book a cruise, they are required to pay a refundable 20% deposit, which is initially recognized as deferred income. This is correct. Okay. The advance which we are receiving is a deferred income. The balance of 80% is paid at least 6 weeks before the cruise commences. And at this point also, it is recognized as deferred revenue. This is also right, because still the revenue is not yet realized. We haven't provided the service. The full amount of the ticket price is transferred to revenue when the cruise starts, irrespective of the duration of the cruise. See, this is wrong. This is wrong. There will be an issue of cutoff at the year end. If any cruise trip is not completed at the year end, we cannot recognize the portion of the revenue which is not yet performed. See, as per IFRS 15, there are two approaches for recognizing revenue. One is point in time, when we give a good and we recognize a revenue. When we simply give a good and we recognize a revenue. And then there is a situation of over the time, of over the period, when we are giving the service over the time period. In that case, we spread the revenue over the time period. They record the 20% advance as deferred revenue. That is good, because at that time the service has not been provided. They record the balance 80% ticket, which is received 6 weeks before as deferred revenue. That is also correct. But then they recognize the entire revenue together when the trip starts. That is wrong. If any trip is not completed at the year end, we can only recognize the part of the revenue of that trip till the portion we have already provided service. Because if you remember the background information, it was written here that typically the trip takes 2 weeks, but in some cases it can last up to 6 weeks. So yes, there can be 6 weeks means it is almost 1.5 months. So this means that there can be some portion of the revenue which shouldn't be recognized at the year end. So revenue is always a major issue, you all know. Revenue is always a major issue, and wrong revenue recognition policy will create a significant concern. The remaining 15% revenue is derived from on-board sale of food, drinks, and entertainments and other items to passengers. Management monitors this revenue stream closely as it achieves a higher gross margin, and staff are encouraged to maximize these sales to customers. Now, there is a concern that whether they recognize this on-board sale as a segment or not. As per IFRS 8 operating segments, if any segment is giving you a revenue, profit, or represent assets which are more than 10% of the total entity, you have to record it as a separate segment. Okay, if you look at the data, only the group revenue was given. Okay, so now we need to think that whether they are following segmental revenue or not. Okay, revenue is presented on segmental basis in notes to the FS with segment based on 3 brands. Now see, they are only creating the segment for their 3 brands. They are not creating a segment for on-board sales. See, this is a problem. One is the ticket revenue, which they are selling the ticket, and the second is the on-board sales. These 3 ships are the segments, I agree, But onboard sales should also be shown as a separate segment because it is more than 10% of the group revenue. Okay. The revenue projected of Sunseeker Cruises is 320 million. Last year it was 288. Explorer Cruises has declined from 190 to 180, and Pioneer Cruises have increased from 192 to 264. You can perform a good analysis of trends. Okay, you all know that the trend analysis gives us the marks. Trends, changes in profit margin, these all calculation of ratios will give you a good mark in the examination. Note 2, operating licenses are required for the Pioneer cruise ships to visit certain destinations. Licenses are amortized over the specific period to which the license relates. So yes, that is also right treatment. Then note 3 is property, plant and equipment. Let's look at it. Ships in use have increased from 2010 to 2041. Ships under construction have increased from 62 to 83. Other property, plant and equipment has increased from 173 to 180. This is our total property, plant and equipment. There is accumulated depreciation and carrying amount. So this is the selected financial information which is provided. Then let's look at the audit team meeting notes. Okay, let's read it. A meeting took place yesterday in which the audit engagement partner discussed several issues. Recent developments affecting Pioneer Cruises. See, we are reading the question first. Okay, if maybe some students will get bored that, okay, sir is only reading the question. See, I'm reading the question because I will draft the complete answer with you people. Okay, it is very easy for me to open the examiner answer and just refer it. But it will never give you a guideline that how you have to draft the form. Okay, so we'll look at everything in detail. Just listen to me with patience and concentration. Okay, just motivating the kids to remain connected. The recent development affecting Pioneer Cruises. Last week, the government of several countries, which form major part of Pioneer Cruise itineraries, withdrew their operating licenses with immediate effect. The governments have stated that this is likely to be a temporary measure put in place to limit the number of tourists visiting the areas of natural beauty, but they will not confirm when the group can resume its operations. See, this is an impairment indicator. It is an impairment indicator. If the licenses are withdrawn, it is an impairment indicator. Impairment indicator for what? Impairment indicator for the licenses which you have booked in the intangible assets. If you remember, the operating licenses have only declined from 57 to 56. This reflects normal amortization. But apparently there is an impairment situation. If the licenses have been blocked even temporarily, it will affect our future projected revenues. The discounted cash flows will get affected. Okay? There is one odd thing. If you look at Pioneer Cruises, their revenue have increased during the year. So you can raise a question here also that when during the year, the governments have withdrawn their licenses. Last week, the government of several countries have withdrawn the licenses. So why the Pioneer Cruise revenue is increasing? Now, there are two reasons. Maybe the people are visiting more before these licenses get revoked. The people visited more. But there is a risk that there may be some misstatement in the revenue, or maybe there is some classification issues in the revenue. Like some revenue of Explorer Cruises is included in Pioneer Cruises or something like that. There's a risk always. The risk exists because there is some detail given about withdrawal of the license. Okay. Then there is some detail given relating to cybersecurity attacks. Last month, the group suffered a cybersecurity attack in which the personal information of 1,400 customers, including their credit card details, were stolen. This is the legal issue. We have to think about IS 37 provisions. Maybe the penalties will be imposed. And this is a risk for the business of Crux Group also. that maybe from the next time the people will not be willing to enter the details on the Pegasus Group website, the Crux Group website. Because due to cybersecurity attack, 1,400 customers' data was stolen. According to a representative of the group audit committee, the group's internal audit team had not properly assessed the risk relating to security risk, which is a requirement of recently introduced data protection legislation. So there is a legal risk, there is a risk to the business also, which can lead to overall impairment of the different segments. And there is a concern on the role of internal audit and the audit committee that why the risk was not evaluated well. If they are not doing their work well, it creates a control risk for the entity. In the jurisdiction in which the group operates, the issue which led to cybersecurity attack has now been resolved. See, the issue has been resolved for the future. This does not mean that the data which has been stolen has been resolved. For the future, that loophole is resolved, but obviously it creates a concern for the audit that maybe due to data protection legislation, the business can face penalties and fines. Okay. Secondly, the customers will be reluctant to deal with the Crux Group in the future, so its sales may decline. Then that can lead to impairment issues in future. And the most important thing, that the internal audit team didn't assess the risk well. The Crux Group internal audit team, the audit committee also highlighted this issue later on when this incident has happened. This means that the audit committee and internal audit was not doing their work well on time. So this creates a concern for weak controls in Crux Group. Social and environmental information. The Group Audit Committee has inquired whether Pegasus and Company can provide an additional service to advise management on how to measure certain social and environmental information, which is to be published on the group's website and is required by new regulation in the industry and is required to submit to regulatory authority. So if you remember, this is the part C in the partner's email, where we have to evaluate the matters to be considered before accepting this engagement. So obviously, this will include some information about the competence of the firm and the ethical issues which can arise. Information relates to matters such as water efficiency, energy consumption, charitable donations, and initiatives which support diversity in workplace. In recognition that work is quite urgent, the deadline for submission to regulatory authority falls within the next month. The Group Audit Committee has stated it is willing to pay an enhanced fees for this service. So obviously this paragraph indicates some ethical issues, but that is a separate part C requirement. Okay. And in requirement, we have to simply respond to the audit engagement partner's email. Okay, so we have to prepare the briefing notes in this first requirement. Okay, the name of question is Crux Group. We have to prepare briefing notes. Okay. Now, what is the format of briefing notes? It is very important because in question number 1, there are 4 marks relating to communication. These 4 marks are part of the professional skill marks. Okay, the examiner has told us that in question number 1, there are total 10 professional skill marks, in which communication skill marks can be up to 4 marks. Okay, now how to make the format of the briefing notes? It's very simple. See, simply copy this to from subject and date. Simply copy this. Okay, paste it here and see what I'm doing. Okay, Now, what you will do is that the email was written to us by audit engagement partner, the email which we got in the question, we will shift it above, and now we will make it to Norma Star audit engagement partner, and here we will make it from audit manager. See, I've just shifted it. Okay, see, what I have done is the format of the briefing notes. To from subject and date. This was given in the question. Just pick it up. Just pick it up, bring it to your answer file, paste it here, switch to and from, because now you are responding to email. You are responding to the email and you are preparing the briefing notes. Okay. And you have to give an introduction that what this question is about. Okay. Now, these briefing notes include information relevant to audit planning of the Crux Group for the year ended 30th September 20x5. See, this introduction will always remain constant. You need to understand the approach, the format of the briefing notes. First of all, you need to just switch to and from, because now you are replying them. Okay, the from becomes to and the to becomes from. The partner's email, you are just switching the to and from. It was to audit manager, so now we are responding. So it is from audit manager, and from Norma Star audit engagement partner will come into. Okay. Now, if you want, you can write in subject that you are replying. So some students write read and then they write audit planning for Crux Group. If you write read, this means that you are replying to it. If you don't write read, then also it's okay. Okay. Now in introduction, what you have to do is you have to write simple standard format. These briefing notes include information relevant to audit planning of the Crux Group for the year ending 30th September 2005. Okay. Evaluation. Now you just have to refer each of the requirements. Using in the information in all exhibits, evaluate and prioritize all the significant audit risks to be considered in the planning of the group audit. So this is the first requirement. Evaluation of audit risk relating to the Crux Group audit is included initially in briefing notes. Further, principal audit procedures to be performed on segmental information relating to group revenue. Further, principal audit procedures relating to segmental information on group revenue are also included in briefing notes. Lastly, matters to consider in relation to, just look at the requirement. Lastly, matters to be considered in deciding whether Pegasus and Company should accept the engagement. You can simply copy it from here to provide advice on the group social and environmental information. Lastly, matters to consider in deciding, just a second, in deciding whether Pegasus and Company should accept the engagement to provide advice on the group's social and environmental information is included. Okay, so see, writing this introduction is nothing rocket science. Okay, the examiner says that it needs to be brief. Don't think too much. Don't write too much. It should be very specific that what the briefing notes are about. Okay, if you look at my approach, I've just copy pasted the data from the question. Okay, I do this so that you people can save time in the examination. You don't have to think that, okay, I have to write this and this. Don't do this. Just understand the approach and copy paste the data from the question. From briefing notes format, just put to, from, subject and date. I believe this is very simple. And even I said, don't type it, just switch the to and from tab. Then in introduction, these briefing notes include information relevant to audit planning of the Crux Group for the year ended 30th September 2005. You will just change the name of the group every time and the year end. Okay. Then the requirements, just look at the partner email. Okay. Evaluation of the audit risk relating to the Crux Group audit is included initially in briefing notes. Further, principal audit procedures relating to segmental information on group revenue are also included in briefing notes. Lastly, matters to consider in deciding whether Pegasus and Company should accept the engagement to provide advice on the group's social and environmental information is included. So we referred each of the requirements in the introduction. Now simply start your part A, which is audit risk. Okay, so let's start discussion on part A, audit risk. We will now refer Exhibit 1, which includes the partner's instructions and all the requirements which we have to attend. Part A. Using the information in all exhibits, evaluate and prioritize the significant audit risk to be considered in planning the group audit. Note, you are not required to consider audit risk relating to foreign exchange transactions and balances, as this will be planned separately. 25 marks. See, it is very important that you read the examiner instructions clearly. If you will miss out the examiner instructions, then you will lose marks in professional skill of communication. Like, for example, if any student will include a risk relating to foreign exchange in this answer, despite that examiner has said that we shouldn't consider those risks. First of all, that particular risk will not be marked because that risk will not be part of the marking scheme. Secondly, the student will lose marks in communication skill because he's not reading the examiner instructions carefully. Okay, so now let's start the answer of audit risk. You all know that whenever we are attempting an answer on audit risk, we first of all consider the materiality level which will be used throughout the audit planning. Okay, now in relation to materiality, some guidance is given by the partner. Let's read that. Based on the analysis I have done on this industry, it is appropriate for overall materiality to be based on profitability of the group, as this is the key focus for investors and providers of finance. You all know that as per auditing standard, there are three benchmarks of materiality. One is profit before tax, second is revenue, and third one is assets. The examiner has clearly instructed us to use the benchmark of profitability. Now, when we talk about the benchmark of profitability, the auditing standard provides us the benchmark of profit before tax, which is 5% to 10% of profit before tax. Okay. Now, whenever we are attempting the answer of audit risk, we first of all include a paragraph relating to the materiality which will be used throughout the audit planning. And then we form a judgment that what materiality level should be used throughout the audit. Because auditing standard has given the range of 5% to 10% of PBT. It is the auditor's judgment to determine the level from this range. Now, you can make an argument that since Crux Group is our new audit client, therefore the detection risk will be high. And considering the high detection risk, we will keep a lower materiality level, and that will be 5% of profit before tax. Okay, listen to me carefully while we develop the answer. Now, if we click on Exhibit 3, which is selected financial information, we are provided with the value of profit before tax. We have already read the entire question. Okay, so our profit before tax for 30th September 2005 is $81 million. Okay, so we'll calculate 5% of $81 million, which will be around $4.05 million, and 10% will be $8.1 million. Okay, let's look at it. While I graph the point, I want you all to listen to me carefully. Materiality. Now, materiality level for the Crux Group audit will be between range of 5% to 10% of its profit before tax. Okay, it will be how much? It will be between $4.05 million to $8.1 million. How did we get this 4.05 and 8.1? You can simply use your calculator. Okay, your profit before tax is $81 million. So you will take a range of between 5% to 10% of PBT. Okay, you can use an external calculator. Okay, you can use an external calculator. The calculator is also available on screen also. If you just look at it here, the calculator is available here also. So you can use the on-screen calculator also, and you can use your external calculators also. So $81 million is the PBT. So 5% will be 4.05 million and 10% will be $8.1 million. It will be on auditor's judgment to determine materiality level from this range. Okay, as Crux Group is a new audit client of Pegasus Company. Pegasus Company is our firm. Therefore, detection risk will be high. Okay, considering higher audit risk, materiality level will be capped at lower value, which will be $4.05 million. Okay, so whenever we are writing an answer relating to audit risk, we first of all include a paragraph on materiality. Okay, the examiner clearly instructed us to use the benchmark of profitability. So what we wrote, materiality level for the Crux Group will be between range of 5% to 10% of its profit before tax. Okay. Now, if the examiner wouldn't have instructed us to use profit as a benchmark, then in that case, we would have discussed all the ranges. Okay. See, either the examiner will instruct you any one benchmark that, okay, use profit, revenue, or asset. But if he's not giving you any of the benchmark, you will discuss all the ranges. And then you have to take a judgment. It will be on auditor's judgment to determine materiality level from this range. So now you have to use your judgment that as Crux Group is a new audit client of Pegasus Company, therefore detection risk will be high. Considering higher audit risk, materiality level will be capped at lower value, which will be $4.05 million. Okay. See, I'm drafting the points with you people. Okay. It may take some additional time because we are writing all the points. But this will give you an understanding that how you have to attempt an answer in the examination. It is very easy for me to open the examiner answer and we just read it together. But it will never give you an understanding that how you have to attempt in the exam. Because when we are writing the answer together, we are discussing all the steps and all the process. Okay. Now we'll start writing all the audit risk. Now, the first audit risk will obviously that it is a new audit client. Okay. Crux Group is a new audit client for Pegasus Company. We have read in the partner's email also, and also in the introduction screen, that it is our new client. So what about prioritizing the audit risk? How will we prioritize the audit risk? See, prioritizing is the last step. First of all, we will write all the risk. We'll read the question again. We'll pick up all the risk. We'll write all the risk. And then at the end, we'll do the prioritization. Okay. Obviously, you cannot prioritize it from the start. You don't know that which risk is significant until and unless you write all of them. So first of all, we'll draft all the risk. We'll develop the entire answer. Then we'll simply cut paste the things and we'll do the prioritization. Listen to me with patience and concentration. We'll go through all the steps which you have to use while developing your answer. Okay. So now it is our new client, and obviously new client, the detection risk is high. Reason being that our firm will lack understanding about the Crux Group's business and its environment. Also, the risk will be higher because of opening balances. Now, this is one of the routine risks which you write in audit risk answers. Okay, so it is a new client. You all know that this is an audit point, so you will get 2 marks for this risk. You all have taken my classes, so you all know that when we write an audit-related issue, we get 2 marks. And when we write a risk relating to accounting standard, we can get up till 3 marks. Okay, this paragraph of materiality can gain up to 2 marks. You include a paragraph on materiality when you are writing a risk of material misstatement or when you are writing audit. Okay, see, this is very important that you understand the writing approach of examination. We are answering a requirement relating to audit risk. Materiality point can score up to 2 marks. Okay, and this paragraph of materiality is included when you are writing an answer relating to risk of material misstatement or audit risk. Now we are including the first audit risk, which is new audit client. It is an auditing issue, so it can score up to 2 marks. The approach will be to identify and explain its impact. Okay, now Pegasus company will audit the Crux Group for the first time in year ended 30th September 20x5. It will increase detection risk as in first year of audit, Pegasus company will lack understanding about the Crux Group's business and its environment. Okay, it will affect auditors' ability to identify audit issues. Okay, so you identified the risk that it is first time audit, it's first year of audit, and there will be higher audit risk because we lack understanding about the business and its environment. So you explained it. If it is possible, also write a response to the risk. It will gain professional skill marks. In professional skill, the examiner says that the student should have ability to write responses to the risk also. So if possible, write a response of the risk. Not in all risks, in few risks, you should wrapper some responses also. In order to reduce detection risk, Pegasus company should perform detailed audit planning and spend greater time on audit of the Crux Group. So this is the response, that in order to deal with higher detection risk, you should spend greater time in audit and do detailed audit planning. Okay, so in the first year of audit, when it is a new audit client, there is always this risk that we have a detection issue. You can also add that further audit risk will also be higher in relation to opening balances. As Pegasus company will be auditing the Crux Group, for first time in year ended 30th September 20x5. Therefore, opening balances were not audited by our firm. So if there will be any misstatement in opening balances, that will also create a risk for our firm. Okay, because last year there must be some different auditor and maybe they have not done work carefully. Okay, our firm should perform greater work or should perform audit procedures relating to opening balances as per auditing standards to deal with this risk. Okay, so you can say that our firm should perform, or you can say should plan audit procedures relating to auditing standards to deal with this risk. Okay, so this is one of the routine risks which you include whenever there is an issue of new audit client. That in first year of audit, there is a risk relating to lack of understanding about the business and its environment. There is an issue relating to opening balances because opening balances were not audited by our firm because we didn't do the previous year audit. Okay, so see, I'm drafting the answer with you people. I'm writing like a student that when you are attempting the answer in the examination, you will think, you will write, you will do editing. So you have to gain an understanding that how you have to write in the examination. The most important thing is that don't take stress and pressure in the examination. Write in a relaxed manner. Okay, identify the issues, explain them. If you can write any response to it, write that also. Okay, the most important thing is that don't try and replicate the examiner answers. The examiner answers are not written in time pressure and exam pressure. They are written in a relaxed manner. So you can never write like the examiner in your examination because examiner is not drafting the answer in exam prep. In today's class, we'll draft this entire answer, and in the next class, I will take you to a very important document which is issued by ACC, and that is Read the Mind of Marker. In that document, the examiner has provided us with two answers. Those two answers are of a candidate. Those two candidates have written this answer in their examination. One got very good marks and one got bad marks. So we look at those answers that how the candidate one got good marks and what were the things which he made sure. And what were the mistakes of that bad student, also the candidate too. So what I'm trying to say is that write in relaxed manner. Okay, don't take stress or pressure that, oh, examiner writes like so with so much perfection. How should I write like that? No. You have to look at the marking scheme. You have to make sure that you cover the points of marking scheme. Okay, so we are attempting this answer, the crux group. We started with the initial format of briefing notes that they are addressed to Norma Star. It's from audit manager, subject, date, and we gave a brief introduction. In introduction, you refer the name of the group, you refer the year end, and you refer all the requirements in a brief manner. Please make sure that you don't write introduction in too much detail. Otherwise, you will be wasting your time. Then we started with audit risk. We wrote a paragraph on materiality. We referred the examiner instructions clearly that materiality should be based on profitability. We referred profit before tax. We wrote the range of materiality, and then we defined the justified materiality level. And then we referred a point on new audit client. We identified the issue, we gave the reason, and we told the impact that what will be the impact for it. Like, for example, in first year of audit, there will be issue of lack of understanding. It will affect our ability to identify. Similarly, due to first year of audit, there will be risk relating to opening balances. We haven't audited the last year, so there may be issues in opening balance. Okay, now we told that, okay, what should be the response? That we should plan greater procedures. The better word would be plan because currently we are in audit planning phase. Okay, so now let's move forward. Now we'll refer each exhibit, all the information in sequence, and we will graph the risk. Sir, what about prioritization of the risk? We will do prioritization of the risk at the end. First, we will write all the risk and then we'll go for the prioritization. Okay. So now, if we start revising the question from the introduction screen, okay, we have read the question once. Now we'll just do the fast review and we'll pick up the points. This is what you will do in the examination. So it is 1st July 2005. You are a manager in audit department of Pegasus, a firm of chartered certified accountants. You are assigned to the audit of Crux Group, which has a financial year end of 30th September and is a listed entity. Okay, you can refer this issue of listed entity also in some of the risks. Okay, Pegasus was appointed as auditor to the group in January 2005. We have already covered it that this is first year of audit. Then the group operates in travel industry, offering a selection of worldwide itineraries and there's a fleet of 20 cruise ships. The group operates 3 brands which provide different type of cruise experiences. That is some basic information. And then there is information about exhibits. As far as partners email is concerned, we have already covered it. We use the starting data to form the initial format of briefing notes. Then I have provided you with some information which you should use to help you with the planning or the audit of our new client. We have already written it. The crux group for the financial year ending 30th September 2005. Based on the analysis I have done on the industry, it is appropriate for overall materiality to be based on profitability. We have already covered this issue, and then we are doing part. Now let's look at background information. We have already read all of the data. Now we'll just referring all the data again, and then we'll start developing the risk. Group operations. The group operates cruises under 3 brands, which offer passengers a variety of cruise itineraries with a wide choice of destination. Cruise typically lasts for 2 weeks, though some last up to 6 weeks. If you remember, this information of 6 weeks was very important for their revenue recognition policy, because we read somewhere in the financial data bracket that they recognize the revenue immediately when the trip starts. So we identified the issue that there is a risk relating to cutoff. We'll look at it when we'll go towards revenue. The brands are internally generated and therefore are not recognized as intangible asset within the group financial statement. This is correct. Internally generated brands are not recognized. Then there is information about 3 brands: Sunseeker Cruises, Explorer Cruises, and Pioneer Cruises. Okay. Now, business developments in the year. I want you all to listen to me carefully. Sunseeker Cruises. In this financial year, the group will spend $75 million on upgrading and maintenance of Sunseeker Cruises. So the $75 million which they are spending on upgradation and maintenance, there is a risk relating to financial statement, that whether they are differentiating between capital expenditure and revenue expenditure in a proper manner. These luxury ships have to adhere to a very high standard, so the group regularly incurs high expenditure on their maintenance, as well as refurbishment. Several ships have been enhanced by the installation of new entertainment facilities, including cinemas and gyms. Equipments in the gym will need to be replaced on average every 3 years. So let's write a risk on $75 million spending, okay, which they are doing in relation to upgradation and maintenance of their ships. Okay, spending on Sunseeker Cruises. Okay, so it is a risk relating to financial statement. You all know the approach when we are writing a risk relating to accounting, that we first write the correct accounting treatment. The crux group should divide its spending done on Sunseeker cruise ships, upgradation and maintenance between capital expenditure head and revenue expenditure head as per IAS 60. If you remember the accounting standard number, it is good to refer it. If you don't remember, just write as per accounting standard. Okay. Now, the crux group should capitalize its spending done on upgradation of ships as property, or you can say in head of property, plant and equipment. Now, upgradation expenses include, outflows include, it was written clearly that they have installed new entertainment facilities, include installation of new entertainment facilities and gyms, include installation of new entertainment facilities, including cinemas and gyms. However, spending done on maintenance of ships should be expensed out as a revenue expenditure. Okay, so this is the correct accounting treatment which they should be followed. Now, what is a risk? Okay, so once done with the correct accounting treatment, now we will comment on the risk and the heads which will be affected if there is a misstatement. If the Crux Group management, will not divide its outflows between capital expenditure head and revenue expenditure head properly, then it will misstate its profits and property, plant, and equipment. Okay, so the risk is that if the outflows are not divided properly, it will misstate the property, plant, and equipment head and profits. Okay, now you should explain the heads affected by taking any particular opinion. Like, for example, if we write, if maintenance outflows are wrongly capitalized, then it will overstate profits and assets of the Crux Group. Okay, you will take one side that, okay, maintenance outflows are capitalized. There is also an opinion that if capital expenditures are expensed out, so you can take either side. So first of all, we wrote the correct treatment that Crux Group should divide its spending done on Sunseeker cruise ships, upgradation and maintenance between capital expenditure head and revenue expenditure head as per IAS 16. If you remember the number of accounting standard, it is very good. If you don't remember, just write as per accounting standards. The Crux Group should capitalize its spending done on upgradation of ships in head of property, plant, and equipment. Upgradation outflows include installation of new entertainment facilities, including cinemas and gyms. However, spending done on maintenance should be expensed out. So this was the correct accounting treatment. If the Crux Group management will not divide its outflows between capital expenditure head and revenue expenditure head, then it will misstate its profits and property, plant, and equipment. So the risk and the heads that can be affected. And then we formed one opinion that if maintenance outflows are wrongly capitalized, then it will overstate profits and assets of the Crux Group. Now, if you look at the value of the spending, it is $75 million. Okay. Spending of $75 million is material to financial statements as it exceeds materiality level of the Crux Group. Okay, so you will comment on the materiality that the Crux Group materiality level was determined at $4.05 million. So it is exceeding the materiality level. So this was a risk relating to outflows done on Sunseeker cruises. It was an accounting standard risk. So we wrote the correct accounting treatment. We referred the risk. We referred the head affected, and we commented on the materiality. Okay, I hope that you are getting. So 2 marks for the comment on materiality, the first issue which we referred, then 2 marks on new audit client, it brings total to 4, and then spending on Sunseeker cruises, 3 marks. So 2, 2, and then 3, we are done with 7 marks. It is very important that you understand the marking scheme of the examiner. Otherwise, you will not know that where you have to stop your answer. Okay? Now, if we go back to the background information, there is one more thing. Equipment in gym will need to be replaced on average 3 years. This is also a risk that management of the Crux Group should charge depreciation on all of its assets, specifically according to their life. Like these gym equipment should be depreciated over their specific 3 years life. Maybe cinema and other tools or infrastructure in gym and entertainment facilities may have different life. So one more risk relating to depreciation of gym equipment. Okay, again, it is a risk relating to accounting standard. So first of all, we will write the correct accounting standard. Gym equipments should be depreciated according to their specific useful life of 3 years as per IAS 16. Okay, all assets of the Crux Group should be depreciated according to their specific useful lives. Okay, gym equipments have to be replaced after every 3 years. Therefore, their useful life for the Crux Group is or will be 3 years only. Okay, so this is the correct accounting treatment, that what they should be doing. Now, what is the risk here? Think about it. That risk is that they may be depreciating everything in the gym, including the infrastructure and everything, on a single useful life. And that can be different from 3 years. Okay, a risk exists that the Crux Group may be depreciating all the assets of gym on any other useful life, as it will include infrastructure and other assets also. Okay, if gym equipments are being depreciated at any useful life which is other than 3 years, then it will overstate, or you can currently write, then it will misstate its assets and depreciation expense. Okay, so first of all, we write the correct accounting treatment, that gym equipment should be depreciated according to their specific useful life of 3 years as per IAS. All assets of the Crux Group should be depreciated according to their specific useful lives. Gym equipments have to be replaced after every 3 years. Therefore, their useful life for the Crux Group should be 3 years only. A risk exists that the Crux Group may be depreciating all the assets of gym on any other useful life, as it will include infrastructure and other assets also. If the gym equipments are being depreciated at any useful life which is other than 3 years, then it will misstate its assets and depreciation expense. So the correct accounting treatment and then the risk. Okay, if you want to form any judgment, like normally other assets will have a greater useful life as compared to gym equipments. Therefore, a risk exists that the Crux Group may be using a greater useful life for depreciating the gym equipments. Okay, equipments. It will overstate assets. It will overstate assets and understate the depreciation expense. Okay, let me repeat it again one time so that if anyone has any query, it gets clear. See, I'm drafting the points with you. We are thinking, we are writing, and we are just doing it like you will be doing in the examination. You think, you write the point, you do editing, you make improvements as you develop the answer. First of all, we wrote the correct accounting since it is an accounting standard list. Gym equipment should be depreciated according to their specific useful life. Okay, all assets should be depreciated according to their specific life. For example, if there is any infrastructural improvement, if there is any computer or anything else, everything should be depreciated according to their specific life. Gym equipments have to be replaced after every 3 years, therefore their life will be 3 years. Okay, then we referred a risk. that Crux Group may be depreciating all assets on any other useful life, as it will include infrastructure and other assets also. Then we made a specific judgmental risk. If you make that, it is good. If gym equipments are being depreciated at any useful life, which is other than 3 years, it will misstate assets and depreciation. Normally, other assets will have a greater useful life as compared to gym equipments. Therefore, a risk exists that Crux Group may be using a greater useful life. Now, when you will use a greater useful life, you will charge lesser depreciation, which will overstate your assets and understate your depreciation expense. Okay, again, it is a risk relating to accounting standard, so you can get a score up till 3 months. Okay, the values were not given, so you didn't refer the issue of materiality. There was no value given that what is the depreciation per year. Okay, I hope that you are getting it. When you are writing a risk relating to accounting standard, you write the correct treatment, you discuss the risk, and you talk on heads affected. Is it clear? Now, let's move forward. Explorer cruises. So we are not doing prioritization of risk. See, we will do this prioritizing thing at the end. Once we'll develop the risk, and then we'll simply cut paste. We'll move the important ones above. Okay. And I've told you that you don't have to prioritize all the risk. The examiner has stated in the professional skill marks that prioritization has to be done for few important risks only, that you should write few important risks at the start. And you have to explain the reason also that why those risks are important. The Explorer cruise ships, while still luxurious, are the oldest ships in the fleet. And the group is gradually replacing these with the new ships. During the financial year, 2 new ships at a cost of $110 million will come into use. The ships took 3 years to build and were constructed by Vala Shipbuilder Company, which is not owned by the group. However, the chairman of the group, Max Draco, is also the chairman of Vala Shipbuilder Company. So it's a situation of related party. Key management personnel of our group is serving at that company also. And his son is the company's chief executive officer. Okay, so this is a risk relating to related party transaction. Related party transaction. I want you all to listen to me and concentrate while I draft this risk. Okay, again, it is a risk relating to accounting standard. So first you will write the correct accounting treatment. Okay, purchase of ships from Vala Shipbuilder Company is a related party transaction, as key management personnel of the Crux Group, who is the name of that person is of the Crux Group. This the ship took and were constructed by Vala Shipbuilder Company, which is not owned by the group. However, the chairman of the group, Max Draco, okay, as key management personnel of the Crux Group, Max Draco is also the chairman at Vala Shipbuilder Company. Okay, Max Draco is a key management personnel of the Crux Group, as he is the chairman of the group. Okay, as he's the chairman of the group, and he's also serving as a chairman at Vala Shipbuilder Company. You can refer it here clearly. The ships took 3 years to build and were constructed by Vala Shipbuilder Company, a company which is not owned by the group. However, the chairman of the group, Max Draco, is also the chairman of Vala Shipbuilder Company. And there is also another reason of it being a related party, because his son is serving as a CEO there. Okay. Vala Shipbuilder Company is also a related party of the Crux Group, as CEO of Vala Shipbuilder Company. is son of Max Draco, who is the chairman of the Crux Group. Okay? If close family of key management personnel is engaged in with any company to whom the company is doing transaction, it also creates a concern of related party. If close family of key management personnel is part of any entity, then it also creates a related party transaction or a situation. Okay. Now, as the Crux Group has done transaction with Vala Shipbuilder Company during the year, therefore, a disclosure relating to related party will be required in financial statement. Okay. Now see, the disclosure is required because a transaction was done during the year. Okay. What that disclosure should state, it should give the detail about the transaction, its amount, whether it was done on arm's length terms or not. Okay. Disclosure should include information about the transaction done with Vala Shipbuilder Company done with Vala Shipbuilder Company relating to purchase of ship. Okay, its value, amount outstanding at year end, and whether it was on arm's length basis or not. Okay, so this is the correct accounting treatment. See, what you need to understand is that when you are writing the point in the examination, you think and then you draft. Obviously, it is not like that you'll simply copy paste the point from the examination. You draft it in a, I would say, building block model. That purchase of ship from Vala Shipbuilder Company is a related party transaction. As key management personnel of the Crux Group, Max Draco is also the chairman of Vala Shipbuilder Company. Max Draco is a key management personnel of the group, as he is the chairman of the group also. Vala Shipbuilder Company is also related party of the Crux Group, as CEO of Vala Shipbuilder Company is son of Max Draco, who is the chairman of the Crux Group. So close family member also creates a situation of related party. If close family of key management personnel is engaged as part of an entity, then it also creates a related party situation. As the Crux Group has done transaction with Vala Shipbuilder Company during the year, therefore a disclosure of related party will be required in financial statement as per IAS 24. If you want, you can give the reference of IAS number also, but that is not mandatory. I've told you earlier also. Disclosure should include information about the transaction done with Vala Shipbuilder Company relating to purchase of ship, its value, amount outstanding at year end, and whether it was on arm's length basis or not. So this is the correct accounting treatment. Now, what is a risk? A risk exists that the Crux Group has not given disclosure relating to related party transaction in its financial statement, as the group do not own any shares in Vala Shipbuilder Company. So the group may make an argument that how can we know that our chairman is also serving there? We didn't have any shares, we didn't have any information. It was written here that if you read here, there was something written about it. The ships, yes, a company which is not owned by the group. So the group can make an argument that we didn't have any shares, so how can we know about the related party? But obviously, it is the responsibility that at every year end, we ask the key management personnel to disclose their relationship in any transaction done by the group. Okay. Now, what will be the heads affected? If disclosure relating to related party is not given, then it will misstate notes to the financial statement. Okay, since it is a transaction which need to be disclosed in disclosure notes. So obviously it will not affect any numbers, but it will misstate the notes to the financial statement. Now let's comment on its materiality. Related party transactions are considered as qualitatively material to financial statements irrespective of their amount. Okay, so this transaction will be considered as material. Even if the amount is insignificant, then also it is material. But if you look at the amount of the transaction which is done during the year, it is $110 million. Okay, the transaction of that ship is $110 million, which is obviously a big transaction. Okay, in case of transaction done with Vala Shipbuilder Company, it is material from quantitative aspect also, as two ships purchased of $110 million exceed materiality level of the group. Okay, so I will repeat the point again. See, I'm saying it again that it takes greater time when I draft the risk with you people. But this gives you an understanding that how you have to draft in the examination. It would save a lot of my time. I just read the examiner answer. That will never give you an understanding that how you have to deal in the examination. This is what you need to understand. Okay, related party transaction. Purchase of ships from Vala Shipbuilder Company is a related party transaction. Why? Because our chairman is also serving as the chairman there in that company also. Secondly, the son of our chairman is also serving as a CEO there. So it's a related party transaction. We have to give a disclosure as the Crux Group has done transaction during the year. Therefore, a disclosure of related party is required. Whenever there is a transaction during the year or there is some outstanding balance at the year end, the disclosure note is required. Now, what the disclosure will include? It will include information about the transaction, the relation, amount, outstanding balance, whether it was on arm's length or not. Okay. Then we argue that a risk exists that disclosure is not given. Because the Crux Group can argue that how can we know about this relation? We don't own any shares in that Vala Shipbuilder Company, but it is the responsibility that we need to ask all the key management personnel to disclose their relationship in any of the transactions done by the group. Okay, and then we commented on the materiality, that it is qualitatively material irrespective of the amount. And as the transaction is very big, so it is quantitatively material also. I hope that you people are getting. Okay, let's read further. If you have any query after this detailed discussion also, then also you can ask. See, I'm teaching very slowly and in a detailed manner so that you people can understand the approach of drafting the answers. Now, the purchase of the ship was financed through a $110 million loan with a fixed interest rate of 6% per annum. A further 3 ships are currently under construction by Vala Shipbuilder Company. The group has taken out a loan of $180 million with a 6.5% fixed interest rate to finance this capital expenditure. Now you all know that as per IS 23 borrowing cost, please use your mind. As per IS 23 borrowing cost, if we are financing the capital expenditures through borrowings, we have to capitalize the interest expense. There is a risk that they may not be capitalizing the borrowing cost. Okay. And as the construction of the ship is taking more than a year, it is taking 3 years. So it's a qualifying asset. Okay. Let's look at capitalization of borrowing cost. I want you all to concentrate on it while I draft these points. Capitalization of borrowing cost. Now, as per IS 23, if you remember the number of accounting standard, you should write. Otherwise, you can simply write as per borrowing cost. Like in related party, we didn't refer as per IS 24 anyway. So it's just giving a message that it is not necessary to write the standard numbers. As per IS 23, the Crux Group, as per IS 23, the Crux Group should capitalize its borrowing cost relating to loans it has taken to finance construction of ships. Of ships for what is the name of the segment of Explorer Cruises? Please make sure that you give better references of the question. Okay, for Explorer Cruises segment. Okay, as per IS 23, the Crux Group should capitalize its borrowing cost relating to loans it has taken to finance construction of ships for Explorer Cruises segment. Construction of ships is taking more than 1 year, is taking a period of more than 1 year. Therefore, it is a qualifying asset as per IS 23 for capitalization of borrowing cost. Okay, borrowing cost should continue to be capitalized till the point asset becomes available for use for the Crux Group. Okay, so we should continue to capitalize the borrowing cost during the construction period until the period it becomes available for the use for the group. So this is the correct accounting treatment, that what should be done as per IAS. Now, what is the risk? A risk exists that the Crux Group is not capitalizing the borrowing cost relating to construction, relating to loan taken for construction of ships. This will understate its property, plant and equipment, and its profits. Because when you will book an interest expense, you are understating your profits. And when you are not capitalizing the asset, you are understating your property, plant, and equipment. A risk exists that Crux Group is not capitalizing the borrowing cost relating to loan taken for construction. This will understate its property, plant, and equipment and its profits. Now, currently, the ships under construction, the group has taken out a loan of $180 million with a 6.5% interest rate. Now, loan taken for ships under construction carry interest amount of how much? $180 million multiplied by 6.5%. So this will be $11.7 million. Loan taken for ships under construction carry interest amount of $11.75 million, which exceed materiality level of the Crux Group. Okay, now we have already determined the materiality level at the start of the question, that this materiality level was $4.05 million. So we are not calculating the materiality level again and again. We are just commenting using that materiality level. So again, this was a risk relating to accounting standard. First, we wrote the correct accounting treatment. Okay, till here, that as per IS 23, we should be capitalizing the borrowing cost. Then we refer the risk that if they are not capitalizing the borrowing cost, it will understate their profits and property, plant, and equipment. And then we commented on material. I hope that you people are understanding. Okay. See, I'm going very slowly because I'm trying to make clear the approach of the examination. Okay. With passage of time, you will gain confidence that yes, you can do. This is just the first paper which we are doing, the first question and the first paper. We'll continue these practice session for 5 complete papers. 5 complete papers means 15 questions. And then I will ask you to do complete papers and send me for marking and fee. Okay. So how many marks are done? Okay. Please make sure that we are attempting the technical marks only. 25 marks for this requirement are technical marks. 5 professional skill marks will be given for free if you are developing your answer in a better analysis and evaluation, better judgment, better communication. So those professional skill marks, the 10 professional marks are separate. In question number 1, there are 10 professional marks. So up to 2 marks for materiality, then 2 marks for audit related issue, new audit plan, then 3 marks on spending on Sunseeker cruises. So 2 plus 2, 4 plus 3, 7. Then depreciation of gym equipment. It was also an accounting standard risk. So 3 marks for it. So it brings the balance to 10. Then related party transaction, 3 marks. Again, an accounting standard risk, 13 marks. And capitalization of borrowing cost, 3 marks. So it brings total to 16 marks. We are only left with 9 marks. And then we have to do the prioritization. Okay, let's move forward. Please listen to things carefully. If you have any query, feel free to contact me on my WhatsApp. Okay, now Pioneer Cruises. These cruises are for more adventurous travelers and are growing in popularity. In order to visit certain destinations on these special cruises, the group has to acquire operating licenses from the government. The cost of the license acquisition is capitalized as an intangible asset. Apparently, there is no risk here. Okay, they just acquire the license. We need to look forward if any further data is given relating to licenses. Now, let's look at the selected financial information, which is given in relation to Crux Group. The revenue has increased from $670 to $764 million. Operating profit has increased from $101 to $145 million. PBT has increased from $65 to $81 million. So you can include a point on financial analysis of the client, the ratio, the trend analysis, if there is any abnormal movements. Okay. Total assets, then including in total assets, there is operating license, which is reduced from 57 to 56. Property, plant, and equipment, which is increased from 1,510 to 1,520. Okay. The point on ratios and trends, we will include it at last. Because for that, we need to have understanding of the complete question. Okay. Now, note 1. Revenue includes passenger ticket sales, which accounts for approximately 85% of the revenue. When customer book a cruise, they are required to pay a refundable 20% deposit, which is initially recognized as deferred revenue. This is correct. The balance of 80% is paid at least 6 weeks before the cruise commences. And at that point also, it is recognized as a deferred revenue. This is also correct because currently the service is not provided. The full amount of the ticket price is transferred to revenue when the cruise starts, irrespective of the duration of the cruise. Here there is a problem. We cannot recognize the entire revenue when the cruise starts. We have to book revenue according to the service which we have provided. Okay, we have to book revenue according to the service which we have provided. Because if you remember, it was written in the background information that some cruise ships can take from 2 weeks up till 6 weeks. So there can be some journeys which are incomplete at the year end. So they are recording entire revenue together, which is obviously a problem. And this is a significant risk because revenue is a very significant head for the financial statement. The remaining 15% revenue is derived from onboard sale of food, drink, entertainment, and other items to passengers. Management monitors this revenue stream closely as it achieves a higher gross profit margin, and staff are encouraged to maximize these sales to customers. So here you can write a point relating to segment for onboard sales because it represents 15% of the revenue. But first, let's write a point on revenue recognition policy. Okay, I want you all to listen to me carefully. It is again a risk relating to accounting standard. The Crux Group should recognize revenue of ticket sales according to trip completion. Okay, as per IFRS 15, we recognize revenue according to the service provided. Okay, so in the case of the Crux Group, it is the completion of trip. As per IFRS 15, revenue for services should be recognized according to completion of service. Okay, now what the management of Crux Group is doing, when customers book a cruise, they are required to pay a refundable 20% deposit, which is initially recognized as deferred revenue. It's correct because the trip has not yet started. The balance 80% is paid at least 6 weeks before the cruise commences, and that point also it is recognized as deferred revenue. This is also correct because till that time, the trip has not yet started. The full amount of ticket price is transferred to revenue when the cruise starts, irrespective of the duration of the cruise. See, this is wrong. You have to recognize the revenue according to the service which you provide. Okay, like if I take an example of my teaching, I cannot recognize entire revenue when I start the course. I have to book revenue according to the completion of the service. And in case of the Crux Group, these trips can take up to 6 weeks. So there can be some extra revenue which has been booked. Okay, now let's look at it. The deposit amount received by the Crux Group is recognized as deferred revenue. It is correct because at that time, service of trip has not yet started. Similarly, management is doing correct treatment with receipt of balance 80% amount, that it is also recorded as deferred revenue because at that time also trip has not yet started. However, management is recognizing entire revenue on start of cruise trip. This is a wrong treatment as revenue should spread over the duration of cruise trip. Okay, some revenue recognized at year end may relate to cruise trips which are not yet completed. Okay, this will overstate its revenue and understate deferred revenue liability, which we call as unearned income liability, as duration of trip is still incomplete, and that will represent unearned revenue. Okay, I will repeat it again. See, first of all, we write the correct accounting. The Crux Group should recognize revenue of ticket sales according to trip completion. As per IFRS 15, revenue of trip should be recognized according to the completion of service. The deposit amount received by the Crux Group is recognized as deferred revenue. It is correct because at that time, service of trip has not yet started. Similarly, management is doing correct treatment with receipt of balance 80% amount. That is also recognized as deferred revenue because at that time also the trip has not yet started because it is received 6 weeks earlier the trip. Okay. However, management is recognizing entire revenue on start of cruise. This is a wrong treatment as revenue should spread over duration of cruise trip. Some revenue recognized at year end may relate to cruise trips which are not yet completed because it was written that some trips can take from 2 weeks up till 6 weeks. This will overstate its revenue and understate deferred revenue liability, as duration of trip is still incomplete and that will represent unearned revenue. Okay. Cruise trips of the Crux Group can range from 2 weeks to 6 weeks. Okay, if you refer the duration given in the question, it is better because it will show your analysis skill. Okay, risk relating to cutoff of revenue needs to be evaluated by auditor specifically in audit planning. Okay, so if you write responses in some of the risk, it will be good because cutoff for the revenue contracts which are recognized at the year. So we commented on the correct treatment, we commented on the risk, we commented on the heads affected that it will overstate revenue and understate the deferred revenue liability. And then we will comment on materiality. Revenue is a significant head for the financial statements, and wrong revenue recognition policy being used will be considered as material and significant to financial statements. Okay, obviously revenue is a significant head and you are using a wrong revenue recognition policy. It's not about one transaction, it will be about many transactions which have been wrongly recognized. Okay, so the correct treatment, comment on the management, the risk, heads affected, and then you comment on material. I hope that you are understanding it. See, the trip is spreading over 6 weeks, so the revenue should also spread over the duration of the trip. Okay, in some of the risk, you can write risk responses. Like here you said that risk relating to cutoff of revenue need to be evaluated by auditors specifically in audit planning. In relation to borrowing cost also, you can add a response that auditors should plan procedures to divide the borrowing cost relating to the loan of capital project and the normal borrowing cost. Okay, so in some of the risk, if you add the responses that the auditor should plan the responses in this way, that will be good from professional marks perspective. Okay, like for example, if you add a response in borrowing cost, auditors should plan procedures relating to division of borrowing cost of loan for capital projects and borrowing cost relating to normal operations. Okay, so these are like the risk responses which you are writing, but it is not necessary that you write in all of them, write in few of them so that the examiner can mark you for professional skills. Even for related party, you can say that auditor will evaluate the related party transactions in detail. He will plan procedures relating to it. So it is like writing the responses. Okay, so now we wrote a point relating to revenue recognition policy. Now, if we look at the data again, there was a point relating to segment of onboard sale. The remaining 15% of revenues derived from onboard sale of food, drink, entertainment, and other items to passengers. Management monitors this revenue stream closely as it achieves a high gross margin. Now, if you just drag down, we have read the entire question. The segment data presented by the management is for these 3 cruises only. They have not given the segmental data for onboard sales. Okay, so you can form a point relating to segmental data for onboard sales. Okay, as per IFRS 8, the Crux Group should consider reporting onboard sales as a separate segment in its financial statement, as its revenue represents more than 10% of the group's revenue. Okay, you all know IFRS 8 operating segment. If any segment represents 10% or more of the revenue, 10% or more of the assets, 10% or more of the profits, any one criteria is satisfied, you have to report it as a separate segment. And apparently, if you look at the segmental data given in the selected financial information, they are not reporting onboard sales as a separate segment. Okay, and it is written clearly here that onboard sale represents 15% of the revenue. Okay, and it is also written that management monitors this revenue stream closely. So there must be some chief operating officer relating to it also. Okay, further management of the Crux Group monitors sale of onboard sales closely, which shows that onboard sale is a separate segment in internal reporting of the Crux Group. Okay, so this is the correct accounting treatment. When it is a separate segment in your internal reporting, you should represent it as a separate segment in financial statement also. Okay, management of Crux Group, is not reporting onboard sales as a separate segment in its financial statements currently. This will misstate notes to the financial statement of the Crux Group. Okay, see, it is not a misstatement relating to numbers. It is a misstatement relating to notes to the FS. Okay, disclosure note is also part of FS. There are 5 components to FS. Despite that, it is not misstating income statement or SOP. It is misstating the 5th component, which is notes to the FS. You have 5 components to financial statement: income statement, statement of financial position, statement of cash flow, statement of changes in equity, and note to the financial statement. Okay, now onboard sales represent 15% of the group revenue, therefore significant and material to financial statements. Okay, obviously 15% of the revenue will be more than 5% of PBT, because 15% revenue is a bigger value of this. Okay, so this was one more risk: segmental data for onboard sales. Again, this was a risk relating to accounting standard, so this can gain you 3 marks. Okay, let's look forward. Now, there is revenue data given in relation to every segment, so you can make a good trend analysis here also, that your revenue is increasing. You can identify the increase and decrease in revenue. Okay, we will form a good point on trend and ratio analysis. Note 2, operating licenses are required for Pioneer Cruises ships to visit certain destinations. Licenses are amortized over the specific period to which each license will apply. So that was written earlier also. Then we have data relating to ships and use, property, plant and equipment, ships under construction, other property, plant and equipment, and accumulated debts. Okay, let's move to Exhibit 4. There is some information relating to that also. A meeting took place yesterday in which the audit engagement partner discussed several issues. Recent developments affecting Pioneer Cruises. Last week, the government of several countries, which form a major part of Pioneer Cruises itineraries, withdrew their operating licenses with immediate effect. The governments have stated that this is likely to be a temporary measure being put in place to limit the number of tourists visiting areas of natural beauty. But they will not confirm when the group can resume operations in these countries. Now our operating licenses have been withdrawn. This creates an impairment indicator for the licenses and the ships of Pioneer Cruises also. If you look at the selected financial information, which was Exhibit 3, the operating licenses have only declined from 57 to 56, which shows that there is a normal amortization booked. There is no impairment thing booked in here. Okay? So let's write a point on impairment of operating licenses. Okay? Operating licenses relating to Pioneer Cruises should be reviewed for impairment, as several of the licenses have been withdrawn by relevant governments. Okay, we need to review them for impairment. Okay, their recoverable amount may have declined at the year end due to their temporary suspension. Okay, despite that the suspension is temporary, but obviously the recoverable amount will decline because your license period is being getting lost. Operating license relating to Pioneer Cruises should be reviewed for impairment, as several licenses have been withdrawn by relevant governments. Their recoverable amounts may have been declined at the year end due to their temporary suspension. If recoverable amount has fallen below carrying value, then impairment expense should be booked. Recoverable amount is higher of fair value less cost to sell and value in use. Okay, management of the Crux Group has not booked impairment. Okay, you are making a judgment that they have not booked impairment, as intangible assets have only declined in financial statements by $1 million, if you remember, from $57 million to $56 million. From $57 million to $56 million. This decline of $1 million represents regular amortization booked. Okay, obviously $1 million is a very less decline, and it represents the routine amortization which they may be booking. Okay, failure to book impairment will overstate profits and intangible assets of the Crux Group. Okay, so the correct accounting treatment, then you commented on the management that apparently the management has not booked the impairment outflow. They have just recorded the amortization, and this decline of $1 million represents regular amortization. Failure to book impairment will overstate profits and assets. Okay, intangible assets of the Crux Group are material to financial statement as their value of $56 million exceed materiality level. Obviously, we don't know that how much impairment should be booked, but the intangible asset head exceeds the materiality level. So I hope that you people are understanding that we write the correct treatment, we comment on the management, we write heads affected, and then we write the materiality comment. Okay, so how many marks are done? If we look at our answer, okay, see, we are developing the answer in a slow and steady manner. We are discussing each of the points. Obviously, in examination, we will draft it in a faster pace comparatively because I'm repeating the things again and again so that you people can have an understanding. So up till 2 marks for materiality, then 2 marks for new audit client, 3 marks on spending on Sunseeker cruises because it was a risk relating to accounting standards. Then depreciation of gym equipment, 3 marks. This brings total to 10 marks. Then related party transaction, again 3 marks. So this brings total to 13. Capitalization of borrowing costs, 3 marks. So it brings 16 marks. Then revenue recognition policy, 3 marks. So this brings total to 19. Segmental data for onboard sales. So this add 3 more marks. So this is 19. Impairment of operating license, 3 more marks. So this brings total to 22 marks. Your question is of 25 marks. So you will add 1 more risk, which will bring your total to 25 marks. Okay, now let's look at it. Let's go to audit of the audit team meeting notes. So there is cyber security attack data. Last month, the group suffered a cyber security attack in which the personal information of 1,400 customers, including their credit card detail, were compromised. Okay, they were stolen. So there is a risk that we may face penalties. And from commercial acumen, maybe the customers may not visit our site again. Our business will be lost. According to the representative of the group audit committee, the group's internal audit team has not properly assessed the risk relating to cybersecurity, which is a risk requirement of the recently introduced data protection legislation in the jurisdiction in which group operates. The issue which led to the cybersecurity attack has now been resolved. So here you can write a risk relating to penalties which may be faced by the group. You can also refer a risk that maybe customers may not be willing to do further business with the Crux Group. And you can also highlight the risk relating to weak governance. We are a listed entity. And the failure of internal audit not properly assessing the risk, and the audit committee's failure also because internal auditor report to the audit committee. So you can also refer the issue relating to bad governance. Okay. Now, since it is a risk relating to auditing, okay, you will use some reference of IS 37, but you will consider it as a risk for 2 marks. Okay. So cyber security attack, but you can write multiple risk in this form. Like you can write a risk on weak governance, you can write a risk on IS 37, and you can also write a comment that customers will not be willing to continue in future. Okay, so 2 to 2, you can increase it up till 4 to 5 marks also. Okay, but since this is the our marking is getting completed, we are already done with 22 marks, and we also want to include 1 point on the trend and ratio analysis, because trend and ratio analysis gives us good marks. So if there will be any point on which we are losing marks, we can get good coverage through trend analysis. So we will write 1 point on cyber security attack only, like we will not cover 2 to 3 risks. Okay. Cyber security attack on the Crux Group database, on the Crux Group customer data, creates a risk for its business as customers may not be willing to do transactions on the Crux Group website in future. Okay, this can lead to decline in sales, which can affect or which can lead to impairment of the Crux Group. Okay. Now, since we are writing only one point on cybersecurity attack, we'll develop a good brief point in which we'll include multiple issues. Further implications for IS 37 also need to be considered, as the Crux Group may face penalty on compromise of this data. Okay, it is against, or it is a breach of data protection legislation. If any legal notice is issued, then Crux Group should recognize a provision for it. Okay, failure to record provision will overstate assets, will overstate profits and understate its provision liability. Okay, so I will repeat it again. See, for cyber security attack, you can break the points also. Like you can write one detail point on the fall in sales that can arise. You can refer that, okay, it will create reputational issues, sales will decline, it can lead to impairment of assets, it can lead to going concern risk of the business. Then you can also draft one point on IS 37 separately. And you can also develop a point on governance issue also. So despite that each is an audit issue, you can write like 2 marks on it. But when you add them, you can write 4 to 5 good marks on. But I've written only one comprehensive point. Reason being that we are almost done with the 25 marks requirement, and we want to include 1 mark on financial data analysis. See, always try and include the point on financial data analysis, because the trends and ratio which you calculate, you got 0.5 mark each for the trend which you calculate. For the ratios, you can get up till 1 mark also. Okay, so cybersecurity attack on the Crux Group data protection creates a risk for business. I referred the issue relating to business because this can give you a professional skill mark for commercial acumen. Okay, as customers may not be willing to do transactions on the Crux Group website in future. This can lead to decline in sales, which can lead to impairment of the Crux Group assets. Okay, because your assets value in use will decline. Further implications for IS 37 also need to be considered, as the Crux Group may face penalty on compromise of this data. Okay, now we'll form one last point on financial data analysis. Okay, and we'll calculate some ratios, some trends. Okay, this will be good because it can get you some good marks relating to calculation. But you just don't calculate the trends, you have to comment on it also. Okay, so if you look at the selected financial information, this was your revenue, profit, and assets. You can see that if we can copy and paste it here. The copy paste is not working, so we have to type it. Increase in group revenue. Okay, how much is the increase in group revenue? Can anyone tell me? Okay, now you can do these ratios on spreadsheet also, or you can do it on word processor also. I prefer doing at word processor so that our entire data is on single presentation. Okay, so 670 minus 764 divided by 670 multiplied by 100. So the increase in revenue is 14%. Increase in group revenue is 14%. Okay, we are calculating the trends and then we'll make comments. Increase in operating profit from 101 to 145. So this has increased by 43.5%. Okay, we are calculating the trends. Increase in operating profit, it is 43.5%. For each trend you calculate, you can get 0.5 marks. Okay, and these calculations can get up till 3 marks in the examination. You can calculate the margin also. Okay, the profit before tax has increased 65 minus 81 divided by 65. It's 24.6% increase in profit before tax. it is 24.6%. Now you can look at the segmental data also. You can skip the asset side because you will make a good comment on your income statement item. Sunseeker Cruises revenue has increased from 288 to 320. Divide by 288, so this has increased by 11%. Increase in revenue of Sunseeker segment, Cruises segment, it is increased by 11.1%. Then what about the second segment? For Explorer Cruises, it declined by 10 million. 10 divided by 190 multiplied by 100. So it has declined by 5.2%. Decrease in revenue of Explorer Cruises segment by 5.26%. Okay, so we are calculating different trends. Okay, and the third segment, for every trend you get 0.5 mark, and if you calculate like margins, you can get up to 1 mark because margins are for 2 years, for whole year and the current year. Pioneer Cruises has increased from 192 to 264 divided by 190. So it has increased by 37.5%. Increase in revenue for Pioneer Cruises segment. It has increased by 37.5%. Okay, so let's comment on this financial data analysis. Okay, let's comment on this financial data analysis. Percentage change in year ended 30th September 20x5. So we have calculated these trends. Now let's comment on that. The group revenue is increased by 14%, whereas operating profit has increased by 43.5%. So this is abnormal increase in operating profit, 40 to 43.5%. Then PBT only increased by 24.6%. So you can make an argument that the growth in operating profit is too much when we compare it with revenue and profit before tax. So there is a risk for some expenses not being recorded, or maybe some misclassification of expenses. Okay, operating profit of the Crux Group has increased by a much greater percentage as compared to increase in revenue and profit before tax. This creates a risk that some expenses have not been recorded by the Crux Group, or maybe there is some misclassification of expenses being done. Okay, see, despite that my 25 marks were completed, I'm then also including this point on financial data analysis. Because if there will be some weakness in your points which you have written, these trend analysis points are easy marks. Like see, 1, 2, 3, 4, 5, 6, 0.5 mark for each calculation. The maximum 3 marks for calculation is given for free here. Okay, even if you don't write comment, if you just calculate the trends, you get the marks for calculation. But it is preferred that you write brief comments. Now, if I talk about the segmental revenue, the segmental revenue of Sunseeker Cruises has increased by 11%. Explorer Cruises has decreased by 5%. And Pioneer Cruises has increased by 37%. So it's very mismatched growth between all segments. So you can make an argument that maybe segmental revenue is not classified properly. Okay. Segmental growth of the Crux Group is uneven in all segments, with Pioneer Cruises showing a very high increase as compared to other two segments. This creates a risk that maybe revenue of segments is misclassified between them. Okay, and if you remember, there is one more problem. If you use your mind, the Pioneer Cruise revenue should have declined because Pioneer Cruises is facing suspension of licenses. And here, if you look at the data, Pioneer Cruises revenue has increased by 37.5%. Okay, there is another risk that Pioneer Cruises revenue should show a decline due to suspension of licenses, whereas in financial data, it is showing an abnormal increase of 37.5%. Okay, so see, we haven't made too much detailed commentary. Objective was to calculate these trends because these trends, this calculation part is giving you 3 marks. Here the objective was to just make brief comments so the examiner gets satisfied that, okay, the student is going in a professional manner, that he has made brief comments. Okay, so how many marks we have attempted if we look at the question again? Okay, then I will make some important comments. We first made the format of briefing notes. This was part of professional skill marks communication thing. Then we started audit risk, which was specifically 25 marks. 2 marks relating to materiality, 2 marks relating to new audit plan. Then 3 marks on spending on Sunseeker cruises, 3 marks on depreciation of gym equipment. So total is 10. 3 marks on related party, 13 marks, 3 marks on capitalization of borrowing cost, 16. Revenue recognition policy, 3 marks. So this brings total to 19. Segmental data for onboard sales, so 22. Impairment of operating license, 3 marks. Okay. Then cyber security attack, and then financial data analysis. So we have attempted more than 25 marks. Now in the examination, if you would skip some of the risk also, then also you can get complete marks. In examination, if you will skip some of the risk also, then also you will get complete 25 marks. Please listen to me. If you will skip some of the risk, then also you will get complete 25 marks because we have attempted more marks. Okay. So 3 plus 3, 6, 3, and then cyber security attack. On cyber security, we have additional points also. Then impairment of licenses, segmental data, revenue recognition, capitalization of borrowing cost, related party, depreciation of gym equipment, spending on Sunseeker cruises, new audit plan. Okay. Now we have written all the risk. Now let's do the prioritization thing. See, you don't have to prioritize all the risk. The examiner is saying just write the important ones first. Okay, not all, just the few important ones. Now see, in my opinion, this revenue recognition policy is most important. So I will cut it and I will move it above. Okay, after new audit client. See, obviously new audit client is also important. I will paste it here. Okay, the formatting has slightly got out. Okay, so this is revenue recognition policy. I moved it up. See, first we'll write about materiality, then new audit client, which is a significant detection risk since it is first year of audit. Then we moved revenue recognition policy above because it is a significant risk. Then spending on Sunseeker cruises, which was also an important risk of $75 million. Okay. Then depreciation of gym equipment is not that much important. So that can come down. But this related party transaction was very important. So what you can do is that you can move this related party transaction thing above. Okay. So we will move this thing above. Sir, if there will be any issue in our prioritization, see, the examiner is just looking at your skill of doing prioritization. So you don't have to take too much stress for it. Do it reasonable. Okay. First, we discussed about materiality. Then new audit line, which is obviously a significant detection risk. Then we referred this revenue recognition policy because that was very significant. Then spending on Sunseeker cruises because that was also $75 million. Then this related party transaction thing. Depreciation of gym equipment is not very significant because it is about 1 year depreciation expense, which will come maximum in the financial statement. Then capitalization of borrowing cost can come above, okay, because it was also a big amount, like $11.7 million amount. Then there was segmental data impairment, those will come down. Okay, so if you want, you can move the capitalization of borrowing cost also above. Okay, so you have done the prioritization of few others. But the examiner says that whenever you do prioritization, you should do the reason for it. So you can write a conclusion of audit risk. Okay, so it can be concluded that audit of the Crux Group is high audit risk as it is first year of audit and there are significant risks relating to financial treatments also. Okay, one of the significant audit risk is relating to revenue recognition policy as it can misstate a major amount of revenue if wrong policy is used. So you need to give a brief reasoning. Further, risk relating to capitalization of outflows on Sunseeker cruises is also significant due to level of spending done. Related party disclosure is also a significant risk due to its nature and amount of transaction involved. Okay, so you don't have to comment on all the prioritizations. You have to comment on the first 2, 3. Okay, so one important thing. Can we give this conclusion at the end of question? Like after all parts? Yes, you can do that also. You can do that also. Okay, and you can give the conclusion after the end of audit risk also. Both are acceptable to you. So let's look at this 25 marks requirement again. See, it has been a long class. So if you get tired, you can pause, get refreshed and come back again also. Okay, my approach is that since it's a first paper, so I'm explaining everything in detail. We first made the format of briefing notes that they are addressed to Norma Star. It's from audit manager, subject, date. Then we gave introduction. We wrote audit risk, started with audit risk. We commented on materiality. Okay, what is the materiality range and the justified level which we'll use. Then the first significant risk is that it's a new audit thing. Always remember that this is considered as significant risk whenever it is a new audit thing. Then we first wrote all the risk and then we did cut pasting for prioritization. Revenue recognition policy was significant because obviously revenue is a very important head in financial statement. Then spending on Sunseeker cruises, this was also a very big amount because it was $75 million. Then related party transaction due to nature and due to its amount. Okay, capitalization of borrowing costs, this was also a big amount. Depreciation of gym equipment, then we listed all the general risk that it was not very much significant. Obviously, it was material, but not very much significant. Then segmental data for onboard sale, impairment of operating licenses, cybersecurity attack, financial data analysis. Okay, we wrote some extra risk also. So if some of the student would miss any of the risk, then also he can get complete. Okay, in the current class, we are developing the answer. In the next class, I will make you go through the examiner answer and read the mind of marker document. Okay, so just look and understand the answer which we are revealing. Let's move towards requirement B. Now this question is not difficult. Design the principal audit procedures to be performed on segmental information relating to group revenue. Now principal audit procedures on segmental information. Now this is a simple 5 marks requirement, and you all know that procedures are not difficult because 1 mark for each procedure. Let's go back and read the segmental information part, and then we will write the procedures. Okay, let's look at it. Okay, so let's look at Exhibit 3, in which information about segmental data is provided to us. Now, some information about segment was provided in note number 1, which was relating to revenue. That remaining 15% of revenue is derived from onboard sale of food, drinks, entertainment, and other items to passengers. Management monitor this revenue stream closely as it achieves a high gross profit margin, and staff are encouraged to maximize these sales to customers. So we identified this in audit risk also, that onboard sales should be reported as a segment. And further, data relating to segment was provided in form of revenue for each of the segment: Sunseeker Cruises, Explorer Cruises, and Pioneer Cruises. Now we have to think about principal audit procedures which will apply to these segments. You have to think about IFRS operating segments. Now in IFRS 8, there are 3 main heads. 1, what is a segment? Second, what is a reportable segment? And third, what we have to disclose. I hope you all remember IFRS 8. What is a segment? Segment is any head of business for which there is a separate chief operating officer, and we have separate financial data available for that. The first is that what is a segment? That there should be a chief operating officer for that head, and there should be separate financial information available relating to it. Second, what is a reportable segment? That it needs at least 10% of the revenue, or 10% of the assets, or 10% of profit or loss. And third, what needs to be disclosed? Segmental revenue, segmental expenses, and the assets of that segment. Okay, so let's think about principal audit procedures on segmental information. It's a 5 marks requirement, so we will write 5 procedures. In every procedure, you have to explain that what is the procedure and what will it verify, the purpose of that procedure. So first of all, we will apply procedure on what is a segment. Okay, discussion should be done with management about organizational structure of the Crux Group, that whether chief operating officer exists on every segment or not. It is a requirement for IFRS 8 to be classified as a segment. So first of all, we look at the organization structure, that whether chief operating officer exists on every segment or not. Okay. Second, that whether separate financial information is available for each segment or not. Okay. Discussion with management should be done on level of financial information available for each segment. Okay, it needs to be verified that whether sufficient financial information exists for each segment and is reviewed by Chief Operating Officer. Okay, the easiest way to write procedures is to think about accounting standard. Verify each of the requirements. What is the procedure? Discuss with management. And what is the purpose of it? Why you need to verify? Okay, so two procedures on what is the segment. Then think about reportable segment. Discuss with management that why on-board sales are not reported as a separate segment despite that it meets criteria of 10% of revenue of being a reportable segment. Okay. Further, separate financial information of it is reviewed by management. Okay, it was written in the question that its separate financial information is reviewed by management because it gives good profit margin. Okay, so discussion on organizational structure. For IFRS 8, it is necessary that there should be chief operating officer. Look at the financial data available of it. Discuss with management that why onboard sales are not reported as a separate segment, despite that it meets criteria of 10% of revenue of being a reportable segment. Okay, so for reportable segment, we look at revenue, assets, and profit or loss. Any one criteria has to be met of 10%. Further, breakup of revenue, profit, and asset needs to be evaluated that whether any other segment exists which meets criteria of being reportable separately. Okay, so you need to verify that whether there is any other segment which is reportable. So two procedures on what is the segment. Then we wrote two on a reportable segment, and then think about the disclosure. We need to report the revenue, expenses, and assets properly. Okay, review, breakup of revenue of the Crux Group to verify that revenue is properly divided between all reportable segments. Okay, is properly divided or is properly reported for all reportable segments. So you can review the breakup of revenue. Similarly, you can review the breakup of expenses, that how the expenses are allocated. What about the unattributable expenses, how they are divided on each segment? Because some expenses are directly attributable, whereas some are the fixed cost for the overall organization, which we call as unattributable. So how we are dividing them? Review the breakup of assets. Okay, so only 5 procedures were required since it was 5 marks requirement, so we wrote 5 on. But you can add more procedures also that review the breakup of expenses reported for each segment, that whether the expenses are divided between each segment in a proper manner. Review the breakup of assets of all the segments. Okay, so this was an easy requirement. Whenever you are writing procedure, just think about the relevant accounting standard and verify its requirements. For every procedure, you have to make sure that you cover what is the procedure and why it is important. What will it verify? What is the purpose? Okay. Review breakup of revenue of the Crux Group to verify that revenue is properly reportable for all reported segments. Okay. I hope that you are getting. Is it clear? Now let's go to the partner's instruction. What's next? Using the information in Exhibit 4, evaluate the matters to be considered in deciding whether Pegasus Company should accept the engagement to provide advice on the group's social and environmental information. What are the matters to be considered before accepting the engagement? It's a 10 marks requirement. Okay. Now we have already read this part, and there was some information relating to ethics. We will look at it again. So this is part C. I have just copied the requirement. Matters to be considered in whether Pegasus and company should accept engagement to provide advice on the group's social and environmental information. We only have to refer Exhibit 4 for this. And here it is social and environmental information. Okay, so matters to consider, there will be 1 mark for each matter. There are ethical issues and other matters also. I want you all to concentrate on it. The Group Audit Committee has inquired whether Pegasus and company can provide an additional service to advise management on how to measure social and environmental information, which is to be published on the group's website and is required by new regulation in the industry and is required to be submitted to regulatory authority. Now, see, there is a problem. How to measure is not the work of auditor, it is the work of management. If the auditor will guide the management on how to measure the things, this will be like accepting management responsibility. Use your mind. How to measure anything is the work of management, not the work of auditor. Auditor work is to verify it, give an opinion that whether it is correct or not. If the auditor will guide on how to measure, this will create an ethical issue. And since we are an auditor, and if you remember, the Crocs Group is a listed entity, we read in the introduction screen. So non-audit services relating to financial statements are prohibited also. The social and environmental information relate to matters such as water efficiency, energy consumption, charitable donations, and initiatives which support diversity in workplace. In recognition that work is quite urgent, the deadline for submission to regulatory authority falls within the next month. The Group Audit Committee has stated that it is willing to pay an enhanced fees for this service. A small paragraph, and just look at the marks given on it, there are 10 marks. 1 mark for each point means that you have to write 10 points. Now you have to develop it very carefully, otherwise you will not be able to identify 10 points from it. Okay, let's first list down the points and then we will write. Accepting management responsibility. Okay, so this is an issue. This needs to be considered that we will be accepting the management responsibility by guiding them on how to measure. I'm just listing down and then I will start writing. Then it can create a self-review thread. Self-review thread to FS as charitable donations will be part of FS. So if we will guide them on how to measure charitable donations, then while auditing the head of charitable donations, it will create a self-review thread. Think in detail. Okay. Then there will be issue of self-review thread again also, as it will become part of other information. And auditor has to comment on consistency of other information. So if auditor will be guiding on how to measure other information, if the auditor will be guiding on how to measure other information, obviously while evaluating the consistency of it, there will be self-review thread. Okay, then you can comment on self-interest thread also, as they have written one thing relating to this word enhanced fees. So maybe it will create self-interest thread if there will be fees dependency due to enhanced fees. Think about more matters which you will consider relating to ethics and other matters. You can talk about competency of firm about this engagement, because it is about measuring social and environmental information, whether we have competency or not. Okay, what other matters you can consider? You can think about the scope of the engagement, as it is new regulatory requirement. We need to think about scope of the engagement, that what is the scope of the engagement. Then you can think about listed entity. So it can be prohibited service. Okay, see, there are 10 marks relating to small paragraph. So you have to think in detail. Accepting management responsibility 1. Self-review threat as charitable donations will also be part of FS. So when we'll be auditing FS, there will be self-review thread because we'll be guiding management on how to do this engagement, how to measure. Measuring, guiding on how to measure is management work, not the auditor work. Self-review thread as even if it is not part of FS, it will be part of other information. And other information is part of FS on which audit, part of annual report on which auditor has to comment on consistency. Then self-interest threat due to enhanced fees, competence of the firm, scope of the engagement as it is new regulatory requirement, listed entity, so it can be a prohibited service. Now you can give other options that use separate team. Okay, use a separate team for this engagement so that the threat can be reduced to acceptable level. Okay, so 2, 4, 6, 8 points are done. Still, you need 2 more points. So let's go and look at it, that whether there is any more thing. Here it is written that deadline for submission of the regulatory authority falls within the next month. So we need to think about deadline issue. Okay, the deadline is very near. We need to think about the deadline issue. Still, you have 1 more point remaining. So let's think about it. The Group Audit Committee has inquired whether Pegasus and Company can provide an additional service to advise management on how to measure certain environmental information, which is to be published on the group's website. And it is required by new regulation in an industry and is required to be submitted to regulatory authority. So here you can say that we can discuss with Audit Committee about the potential breach, because there will be an ethical issue and there can be breach of IESBA code if it is a prohibited service. Okay. Then the social and environmental information relates to matters such as water efficiency, energy consumption. So we need to think about competence of firm also, because how do we know that how you have to measure water efficiency, energy consumption, and all of that? Okay. If in recognition that work is quite urgent, the deadline for submission to regulatory authority falls within next month, the Group Audit Committee has stated that it is willing to pay an enhanced fee so it can create self-interest issue also. So it was just a small paragraph from which we have to write 10 points. So we have identified the 10 points: accepting management responsibility, self-review threat as charitable donation will be part of FS, self-review threat as it will become part of other information, self-interest due to enhanced fees, competence of firm need to be considered, scope of the engagement as it is a new regulatory requirement, listed entity so it may be a prohibited service, use separate team, deadline issue, and discuss with audit committee. Okay, let's start developing the answer on it. I want you all to concentrate on it. Now, we'll replace each point with a complete paragraph. There will be 1 mark for each point, so don't get in too much detail. Write brief like 2.5 minutes. Now, audit committee of the Crux Group has requested Pegasus and Company to provide engagement about measurement of certain social and environmental targets. Okay, this will create an ethical concern as measurement of data is management's responsibility. Being an auditor of Crux Group, Pegasus Company cannot accept management responsibilities in relation to any area as it will create concern for audit activity. Okay, because if you look at the audit report, we clearly define the management responsibilities. So we cannot accept management responsibilities because it will be creating like falsifying information in audit report. Okay. Measurement is management responsibility. We write management responsibilities clearly in the audit report. So auditor cannot get involved in areas of management responsibility. Okay. Now let's talk about the self-review threat. Further, social and environmental engagement requested by audit committee of the Crux Group involve information relating to financial statements also, such as charitable donations, because charitable donations are part of FS also. If auditor will get involved in measurement of information which is relating to financial statements, then it will create self-review threat for audit of financial statements. Auditor may not be able to identify issues in those heads during audit. Okay, because auditor will get biased due to self-review threat. So please be specific, one mark for each point. Since it is a very small paragraph and you have to score 10 marks in it, so obviously it was a bit difficult because maybe the students will not be able to get complete 10 marks because they will not be able to identify 10 complete points from it. Okay, self-review threat as it will become part of other information. Why? Because social and environmental report will also be included in annual report of the company. And this will become part of other information of annual report. And auditor has to comment on consistency of other information with FS. So if I have prepared the other information, while commenting on its consistency, I will be biased. Self-review threat will also be created because social and environmental information will become part of other information in annual report of the Crux Group. Auditor has to comment on consistency of other information with financial statements. If auditor will get involved in measurement of social and environmental information, then he will not be able to maintain independence while commenting on its consistency to FS. Okay. See, what you need to understand is that we have to comment on consistency of other information with the financial statement. Okay. So this social and environmental information will become part of other information. So when we'll be commenting on its consistency with FS, in our audit report, we will not be able to maintain its independence because we were ourselves involved in Specimen. Then self-interest threat will be created due to enhanced fees offered by audit committee relating to social and environmental engagement. Okay, enhanced fees may lead to total revenue of Pegasus company generated from the Crux Group to exceed 15% maximum revenue limit from a single audit client. Okay, so since they are offering us the enhanced fees, so this can lead to exceed the 15% revenue limit from a single client. So self-interest rate will be created due to enhanced fees offered by audit committee relating to social and environmental engagement. Enhanced fees may lead to total revenue of Pegasus company generated from the Crux Group to exceed the 15% limit. So we are just explaining each of the points. Okay. Competence of firm of Pegasus company relating to this engagement needs to be considered. Okay. Audit firm may lack competence to guide about measurement of efficiency. If you refer the specific words such as water efficiency and energy consumption, how do we know about that information? Okay, may lack information, may lack competence to guide about measurement of water efficiency and energy consumption. Further, regulatory requirements are also new. Therefore, competence of firm in relation to it needs to be considered. Okay, so these are matters to be considered. The most important thing is that while writing the point, let's make it clear it's a 1 mark point. So don't create a too much stress. Identify a point and explain its reason. What else you need to consider? Scope of the engagement needs to be considered as engagement relating to social and environmental information. Environmental information is related to new regulatory requirement. Okay, requirements of regulation needs to be considered, that what will be expected from Pegasus company in this engagement. So we need to think about competence and scope of the engagement also. If we accept the engagement without looking at its scope, it may lead to legal issues later on. So if you look at it, these are simple points. The only issue is that maybe you will not be able to think about all 10 points. But still, if you write like 6, 7 points also, then also it's good. Okay. So audit committee has requested us to guide on measurement. Measurement is management responsibility. We cannot do work relating to management responsibility because responsibilities are clearly defined in audit. And Crux Group is our audit plan. Then we need to think about self-review threat, that it includes information relating to FS also. It includes information relating to FS also, so there will be self-review threat. Even if it do not include information relating to FS, other information will become part of audit report when we'll be commenting. So consistency, when we'll be commenting on consistency, it will create a self-review threat because we measured this social and environmental information. Self-interest due to fees dependency, competence issue, scope issue. So we are done with 1, 2, 3, 4, 5, 6. Now the 7th point, listed entity. So it can be a prohibited service. So it also needs to be considered. Needs to be considered that the Crux Group is a listed entity. So it can be a prohibited service as it involves work relating to financial statement data also, like charitable donations, which are part of FS also. Okay, so since it's a listed entity, so it can be a prohibited service also. You can advise other measures also. Use of separate team for this social and environmental service can be a safeguard to reduce ethical threat to acceptable level. So we can use a separate team. Use of separate team for social and environmental service can be a safeguard to reduce ethical threat to acceptable level. If ethical threat cannot be reduced to acceptable level, then Pegasus company should politely decline for this service. Okay? See, one mark issue, be very brief. What is the issue and explain its reason. Then you need to consider the deadline issue, and one action can be that you should discuss with audit committee considering potential breach for the ethical code. Audit committee of the Crux Group has requested that this engagement needs to be completed on urgent basis, as report is to be submitted to regulator next month. Issue of deadline needs to be considered, that whether the Crux Group has available resources like the team to complete this engagement on such an urgent deadline. Okay, if deadline is once accepted and then not met, then it can lead to legal issues, because then the Crux Group will file a claim against us. Lastly, discussion should be done with audit committee of the Crux Group considering potential breaches of IESBA code. Okay, if there are breaches of ethical code, IESB, if you remember the IESB International Ethical Standard Board for Accounting, if you just write ethical code also, then also it is acceptable. If there are breaches of ethical code, then it needs to be discussed with audit committee as they are required to approve it specifically, that it was reported to them and they have approved it specifically. Otherwise, later on, the audit committee will say, the audit committee of the Crux Group, that we didn't know, it is not our responsibility. The entire responsibility lies on the auditor. So it will create issues for us later on. So what were the matters to be considered before accepting the engagement? Okay, so first of all, we said that we will be accepting management responsibility if we accept this. And since in audit report, we define the management responsibilities clearly, so it is will be a concern if we do something which is management responsibility, and we have stated it in the audit report. Then self-review threat, due to financial data being involved in it. Self-review threat, because we have to comment on consistency of other information. Self-interest threat due to fees dependency, competence issue, because we do not lack we lack expertise to measure the efficiency of water and energy consumption. We are there to audit the data. We don't know how to measure these environmental data. We need to think about that whether we have the relevant expertise or not. 5 points, then scope issue, then think about listed entity issue, 7 point. 8 point was an action that you can use separately. 9 was the deadline issue, and 10 was discussion with the audit committee. So this answer was easy if you can pick up the points. So if we look at the exhibit 1, the partner's instruction, we are done with the 40 marks requirement, 25, 530, and then 40. So what about 10 marks? Those are professional skill marks which we have already scored during dance. Okay, so if you look at your complete answer, first of all, we made the format of the briefing notes. We gave introduction, then we wrote all the audit risk. We prioritized them at the end. When we wrote all the audit risk, we prioritized them. We gave a conclusion on audit risk to justify our prioritization. You can give this conclusion at the end of the answer also. See, the conclusion is only required to explain the prioritization. Okay. Then principal audit procedures, and then the matters to be considered. Sir, is one more conclusion required? No, it is not required. I will guide you in the read the mind of marker document that examiner has made it clear that you can give conclusion after audit risk also to explain your prioritization. For other requirements, the conclusion is not necessary. I hope that you all have understood the today's class and the answer which I have given. Today's class was a lengthy one because it was a big question. And it was the first time we were looking at a complete paper. Now, next class is very much important. We look at a very important document, which is Read the Mind of Mark. In that document, scripts of 2 students are given by the examiner. And the examiner has guided us that how he has marked each of the script and what were the marking basis. So that will give you a very detailed guidance on how you have to improve your draft. Okay? If you have any queries, feel free to contact me on my WhatsApp. Thank you, everyone.